Morning all. How are we all doing? Morning Peter. Morning Kennelly, Amy, Bradley, Edward, Neo, Gregors, Ian, Jax, Christian, Evans, Peter. How are we doing? Happy Monday. It's the end of the month. Well, it's nearly the end of the month. End of the month tomorrow. That's what I've got to do. Just get the earnings calendar up. That's not the right earnings calendar. Oh God, where's the earnings calendar gone? That one. Yes, so end of the month. It's the 30th. Tomorrow is the end. There you go. Don't say I don't give you any useful information. Morning, Spencer, V-Man, Ismet. How are we doing? Just kick off with the news. The weekend, nothing much. Obviously, the ground invasion started in Gaza. Oil prices seem to be slightly slipping away, but normally you would expect it to get a little bit bigger, but it's not. So the only news we've had overnight is Australian retail sales, which came out at 0.9 on a 0.3. So if you look at the Aussie pairs, little bit of positive movement on the Australian dollar, but not a lot. So not really any news over the weekend at all. Very flat weekend. Nothing from Japan about intervention. They've kept very, very quiet on that move from last week, but we'll see. The US dollar yen today still holding. So we are at this low at the moment. I've got my pen. So yeah, we're holding this low at the moment. It seems. So this area here, which is the previous resistance, we're holding that. So we bounced out of that this morning so far. So if we can break that level today, we should start a flush back down into these lows and beat that intervention from last week. But we will see. Not from last week, that's the week before's one, wasn't it? That was last week's one. That was the week before's one. That was the week before that's one. We're getting one a week. Until they kick this down, it will carry on getting interventions. So yeah. Morning, Sarah, Virginia, Monkey. How are we doing? So DAX this morning. We've got a bit of a gap up on the DAX. What's the time? 5. So let's do the news first. So clocks changed in the UK. Yeah. So today's confusion day, basically. No one's got a clue what time the US market opens because it's all different now. And next week, it'll all be back to how it was before. So today's live room, if you're coming this afternoon, is at 1:20 p.m., not 2:20 p.m., because we've gone back an hour. The US haven't gone back an hour, so we have to go back an hour. I think. Maybe it's forward. So I might come on early and go, actually, no, we've got 2 hours until the open. But we'll find out, won't we? Afternoon, Evans. Some of us entered the DAX. I'm wondering why no volume. Yes. So don't get into the DAX. It hasn't opened yet. So yeah. So that opens in 5 minutes. If you're in the US or Australia, you're also equally as confused trying to trade the DAX this morning going, why is it not moving? It's fun, isn't it? We only do this for 2 weeks a year, this week and the week in the summer. And next week, it all goes back to normal. So make sure on your EAs, if you're running the stock index hedge EA or you're running the opening range breakout EA, you're adjusting these times. Yeah. Back an hour or forward an hour. Depends where you are in the world. You're going to have to sort it out yourself. Anyway, so the clock's changed. Confusion. Today we've had retail sales. We've got the great. We've got CPI for Spain coming through this morning at market open. This is going to be a fun one this morning. Okay, Spanish CPI coming in 3 minutes at market open. Good timing. Why do you put it at the market open? Then we've got the GDP for Germany coming out at 9 o'clock. So that's today's news. That's it. Once that CPI is out the way, we're done. Morning, it's time. We've got China manufacturing tomorrow. Why have I got China on my charts? Don't want China on my charts. Let's go to that. So we've got the rate for Bank of Japan tomorrow, and then the basically the monetary policy statement and press conference. So this is the biggie tomorrow, is the Bank of Japan. They're not going to change that. They never do. They haven't changed it for 6 years. One time they will, and it will all confuse the hell out of us, and the market will go mental. But might be today, not tomorrow. You never know. But they don't change that. So that's going to be a 0.1 minus. The press conference is what we're interested in, which is when they're going to tell us what they're doing moving forward. So we could get some decent volatility off the yen tomorrow. We've got the Canadian GDP tomorrow, unemployment cost index for the US, it's really rubbish. Consumer confidence tomorrow afternoon, and employment change basically for New Zealand overnight. Then it's non-farm on Wednesday, and basically ISM, all the usual stuff. And then the big one this week, which is the monster mover, potentially, is the Fed fund rate and the press conference. So we've got a proper FOMC on Wednesday. 5.5 is the forecast. Not expecting anything different out of them, but that is where it goes mental in the press conference. That's going to tell us what they're going to do. But what they're going to do is they're going to tell us exactly the same as they've always told us, that we're going to keep it the same for the rest of this year, and the market's going to go, oh my God, and then nothing's going to happen. So highly unlikely we'll get any movement, but we will get volatility. We've got CPI for the Swissy on Thursday morning. Then we've got the rate for the pound. This is the one on Thursday, which could be the big change. We could get a 5.5 here because of what happens to CPI. CPI is not going the right way at the moment. So we could have a potential mover on Thursday. We'll see what Bailey says in the press conference afterwards, but that's 12 o'clock on Thursday. And then we go into proper non-farm payroll, or rather unemployment rate, as it's really known, on Friday afternoon. And then we've got the PMIs in the afternoon as well. So huge week for news this week. Really, really, really big week for news. So hold on to your hats. DAX, we've got a gap up today. We got 1 minute to the open. So absolutely massive gap up today, proper gap. We've got the gap fill which got completed from last week. We are still missing this gap fill. It's tight. This is a tight one, this one, as to whether that is actually classed as a fill. I think the market might have run away from that and gone, yeah, whatever, we'll take a loss on it. So I think that one is probably out of the picture. But this is a biggie, really big one. So markets obviously are rallying today. Don't quite know why, but they are. So if we do drop to the downside, we've got a very, very, very big gap fill on our hands. We could have a big mover. And we've obviously got the Spanish CPI coming in. So be prepared for this one this morning. Obviously, if it breaks to the upside, which it looks like it is at the moment, we'd be looking at the yesterday's high, the previous day's high. Why are those lines drawn over there? Weird. Well, those lines were drawn in the wrong direction for some reason. Indicator gone mental. So yesterday's high, the previous day's high, less likely to be resistive, but yesterday's high will be. So there we go. Market's open, broken long. We'll have a look at everything else in a sec. So we'll see where we go. Downside, obviously, is gap fill today. Very easy. So I'm trading manually on a chart, so bear with me. There. Okay, long break's gone. So we're long on the DAX. TP1 at 2R is basically that little high there, but that's where we should be getting to, which is 3.5. So if we do get a long break today, just can't see it happening because of the size of this gap. It just doesn't make sense, does it? But if it is going to go long today, I'd be more inclined to look at that high than that one, but we'll see. Let's just have a quick look at earnings. What do we have on Friday? Exxon. Oh, that's all pre-market, wasn't it? So we got McDonald's pre-market today, Pinterest aftermarket, Pfizer, and AMD tomorrow. So it's quite a light couple of days. We kick off on Wednesday with most of the earnings this week. Let's see. Evans, time to exit with my small profit before it opens. I'd hold on to it. It's 50-50 shot. Morning, James. My rocket trading strategy is failing. I want a refund. Well, I didn't charge you for it, Franco. I gave it away for free. How good is that? I was waiting for the first comment to come through. So what is the strategy? For those that don't know, I've released a new video over the weekend on YouTube, which was a joke, which is basically my secret trading strategy. This is just to do with what we did in the live room last week, basically. I was just waiting for somebody to say, you didn't tell us what the strategy was. So, but luckily there hasn't been anybody that stupid yet. But I'm waiting for it because everybody is actually got it, which is good for a change. But anyway, it's only a bit of fun. Right, break long is still going. FTSE's breaking to the downside today. Oh, that's something I need to check. One sec. I've got so many terminals open today. I've got 4 terminals I'm trading stock index hedge on now. So they're all over the place. Christian, date October the 30th, 2 p.m. Time left 5 hours 3 minutes. Consensus 4%. Thanks for that. Oh, the German inflation rate that was. I was trying to work out what the hell you were saying there. Yeah, there you go. It's 3.5% on the Spanish CPI. German consensus. What's that? What? German inflation. Spanish inflation, not German. Good. German GDP coming up. You're confusing me this morning. 3.5 on that, which is basically negative euro, positive index. But I'm a bit surprised at the weakness of this move this morning. I was expecting a little bit more out of this morning. But anyway. I've built a solid community. Well, it's not many, is there? Look, it's only 70 of us in here. Because I don't sell Lamborghinis. Never going to build a big community. Solid, maybe, but not big. People want Lamborghinis, and I don't do Lamborghinis. He says, owning a Lamborghini. Don't. Right, we're struggling to go long at the moment on the DAX. So if we do break short, not a lot of. I was expecting a lot more volume than this morning, but I'm not actually that surprised thinking about it because we've gapped up so hard. I suspect there's an awful lot of resistance to go long at the moment. If you look at ADR on this, which is 188 points, this gap today is 105. So it's over 50% of the average daily range, that gap. So markets obviously made a big move. There's a lot of people underwater on shorts at the moment that are going to want the market to get back down there. So if it does reject this high and we do break short, 5R today, which is going to be roughly 3/4 of an ADR from where we've got to, that is the gap fill. So a downside move today would actually be quite nice because if we do get hedged on this and it moves down, we'll probably find a load of buyers coming in there. So it'd be really easy for an aggressive exit. The downside, but we'll see. Might hit target to the upside. Certainly looks like it at the moment, doesn't it? FTSE's starting to turn around. I've got a new platform, a new broker, which I've just started trading with, which has got FTSE on it. So I can monitor the FTSE now as well. Not that it really matters, but anyway. All the best channels on YouTube are small, I know. Then they get big. Quality over quantity, exactly. What we want. Just going to watch this for a little bit more, just to see. There's not a massive amount of volume, but I just want to see if we can get a run up to that target. Because if this breaks down, I might today remove the longs. Rather than hedging it, what I might do is remove the long positions and just leave those shorts on to come down and make profit down here. And then I can always add a hedge back on and take a slightly larger loss today, because I think if this doesn't manage to get out these highs today, it's trying really hard, but it's struggling. If it doesn't manage to get to target, I think it's going to collapse and do the gap fill. And if it does, it's probably going to be fairly quick. So at the moment, it's looking like it's struggling. Sorry about this. I'm just placing some orders. God, I hate MT5. Sorry, I'm trading on MT5 over there. It's really annoying. Would you look at Aussie New Zealand? Yep, will do. Why I don't understand that structure? Don't know. I'll have a look in a sec. Morning, Harold. I just need to watch this first. I just want to see if this rejects. FTSE's come down at the open, but it's trying to rally back up again. But these wicks are huge rejection on the DAX. Looking short to me. Got 1 minute left on this candle. Not looking good, is it? For longs. Not easy this morning, is it? That's looking really bearish, but doesn't seem being. There's not enough sellers in the market either. There's not enough volume in the market today. FTSE's just put in a lovely big, huge, strong candle. So FTSE's rallying, but DAX is really struggling. Okay, come back to that in a minute. I'm watching it over there anyway. So, right. So, Aussie New Zealand. You want to look at? I am short Aussie New Zealand at the moment. So it's basically a double top at the monthlies. So this is last month's high and the previous month's high. We tapped straight into that, rejected it. We're rejecting it again. So it's looking like it's potentially going to roll over south. If it breaks that high today, though, market structure is going to be long. It was extended on the RSI back here, which is where the first entry was short. And then basically just been scaling in short on this. It's very difficult to get a bias on the Aussie New Zealand at the moment. There's no real directional bias either way. So could go either way, this one. But at the moment, we are up at the highs. So this is a very, very strong resistance. Yeah, we rallied hard into that level, rejected it. They tried again, rejected it. And then we basically didn't go anywhere. They had another run at it, rejected it. So the sellers are not interested in going above that 1.1, which is, 1.09 level. We've hit it again, rejected it. We're hitting it again. So it's either going to come back and fill those propulsion gaps. But I mean, it's just awful, isn't it? It's just there's a range. Price discovery to the downside, failed. Huge rally to the upside. It's either going to come back down and test this range, or it's going to come back down and test this range, or it's going to break out that high. I don't know. It's a mess. A mess at the moment, that one. Can't really help you on that one. Set the DAX long, stop loss, break even, and 1R trailing stop. Well done. I'm tempted as well. We've just tapped into that high again. We are certainly not able to get through the highs today. This doesn't look particularly promising for longs at the moment. The FTSE is just attempting new highs and is also struggling at the highs. Not going anywhere. Bearish divergence. Was that on the Aussie-New Zealand? Yeah. You got some bearish divergence going in at the moment. Double top. RSI is weak. Not great, but best divergence is where you have it like that, really, rather than a double top. But it is certainly weakening. Strength is weakening. FTSE's out the highs, so we may well get a rally on the DAX. Come on, Mr. DAX, make your mind up. I think the market's confused because I think half the traders are actually still asleep. We're missing, so we've got all the Frankfurt guys because they've just put the clocks back. They've got up. They're a bit sleepy this morning because they've gained an hour's sleep, but then they lost it because their dog still woke them up at 5 o'clock in the morning because it thought it was 6. He hasn't got an alarm clock. Yeah, so I think maybe they're just a bit sleepy this morning. And obviously everybody in Australia and America who's stayed up to trade the DAX this morning, they've got their times completely wrong, and I've got no idea because they were trading it an hour ago and it wasn't moving and they're all confused. So they've given up. So there's no volume. Confusion morning. Franco, I play the guitar. It took me 7 years for it to talk back to me. Same thing happens in Forex. Exactly, yeah. Too many give up just when the world is about to open to them. Perseverance is a hard lesson to learn. It is very true. A long time to master this. Okay. Long break is on. Propulsion gap filled. Next stop is to our target. So we should be able to get to that target today, I reckon. That was the FTSE helping us along there. Although the FTSE is just rallying straight up into resistance. The line I drew in the past. So get that. Right. So if you do want to go for the gap fill today, obviously we've got high, lower high. This is where we're going to put our lower low in. Yeah. So potentially we could run into basically some resistance, but this area here and this area here, we're certainly going to find limit orders triggering at these levels today. So if you did want to go short for the gap fill, basically the play short for the gap fill is very easy. You go short there, you put a stop loss above that high and your TP is there. The risk reward is huge. Very easy short. So something like that, you're looking at a 3R short. Obviously, take it from wherever you want to take it, but your stop loss is going to be above that high. If it does invalidate that high and the limit orders don't let them through those two levels, if they get through there, they're off. But if they don't get through there, there's a very high probability of the gap fill being completed either today or tomorrow. You might need to hold it overnight. But it's a nice, easy short if you are that way inclined. Obviously, we don't know what it's going to do, but it's all about risk reward at the end of the day. So that is a good risk reward. Tomorrow's a German holiday. Is it? Not according to the calendar, it's not. Well, the bank is certainly not a bank holiday in Germany tomorrow. That would be on the calendar if it was. There's a holiday in France and Italy on Wednesday, but there's nothing on the calendar. It may be a holiday, but it doesn't look like it's impactive on the markets. No. Holidays, bank holidays seem to not be bank holidays now. We get lots of bank holidays where the banks don't actually shut now and the markets don't actually shut. Obviously, there's less traders around, so the volume and volatility is lower, but we seem to have some very weird bank holidays at the minute where they don't actually shut the banks, where they used to, always. I'm going to close out half here just to bank something this morning. I hate trading long. I hate trading away from gaps. I just don't like it. Yeah, just don't like trading away from gaps because we know gaps get filled. And what I don't want to do is get hedged on this after having $1,000, $1,500 in profit sitting on the table. So I'm just going to bank half this morning just because of this gap. Might be totally the wrong thing to do, and it probably is totally the wrong thing to do, but there's no point in letting it run away with me this morning without taking some profit off the table. So I'm banking half, break even second half, and see if we can get a runner. Wrong one. Right. There we go. So we'll see where we go with the second half. Target on the second half. I mean, there's no point in going for 5R. I'd probably just go for the yesterday's high. See if we can get a run up to yesterday's high, which is 3R to the upside. That'd be a decent trade today. If we get up to there, we're probably going to find limits. We are definitely going to find limit orders there. Whether there's enough to drive it back down, I don't know. There's not a massive amount of volume in this market, and therefore there won't be a massive amount of strength in the buyers. So when they do get to any big orders in the market, they're probably going to get bounced. So I'd be surprised if we don't at least get a pullback from it. So might as well just take the profit there. That was still bank kind of 1,800 or so. But it's a little bit too slow. There's a little bit too many sellers, and there's a bloody great reason to go short. So just logic dictates it may not be the best thing in the world to do to let that run. So might as well just bank 0.5% and see if we can get there. Right, let's have a look at the rest of the market. So I've got quite a few positions on still. I've got quite a lot I can bank at the moment, but I'm kind of holding it today just to see what happens. Some of this stuff that I've got on is getting on a bit now because we've had an awful lot of stagnation, mainly on the US dollar, just going sideways for a week or two now. So there's quite a lot of these positions. That one's not particularly old, it's only 3 days old, but the original positions on them are getting, weeks old now because we're not going anywhere. We're just kind of having these big stagnation periods, a bit of a whippy day, and then, it's happening across all instruments at the moment. So what I might do today is just let everything run as it is, and then have a look at taking some profit off tomorrow. So we're going to get a lot of movement this week. We've got some very, very, very big news events coming this week. Bank of Japan rate isn't necessarily going to move the market, but that press conference and the monetary policy statement might, because they keep talking about potentially changing interest rates and moving away from this overseas export model they've got, where they have all of their money overseas, and then they liquidate it, which is where we get these intervention moves. They keep talking about potentially going to the same model that the rest of the world works on and uses, which is interest rates. We have interest rates and we encourage you to buy the yen, rather than we generally discourage you from buying the yen by giving you less money than you give us if you put it into it, which is what this is, negative interest rate. So there is talk about them potentially moving that up to a positive. So this is quite important because they will announce it. They should announce it. Unlikely they will just do it. Never know. The Swiss did. So it could happen. We've also got, obviously, we've got CAD GDP, which isn't a particularly big one. We've got the New Zealand unemployment rates coming, and then we've got the big ones, basically all the rates coming for FOMC. So today I'm going to leave most of my positions on, see if we can get some decent movement, decent headway into them. But tomorrow I'll be looking at closing out partials in preparation for Wednesday, because we could well get a move into Wednesday where they're basically positioning themselves ahead of FOMC. So DAX is pulling back. So see what happens on this one. So that's the limit orders triggering there. Look, yeah. So when I say there's limit orders triggering, that's exactly what I mean. There's orders sitting at that level. There's orders sitting at that level. We know that because the market collapsed from there. The reason the market collapsed there, because they sold it. If they sold it there and they're still short, they're going to sell it again. That's why you get these big pushbacks. So limit orders have triggered at the 2R. Look at that, spot on TP. That would not have triggered me because the spread would not have triggered my TP. And I'd be sitting here now going and swearing at my broker. But anyway, it did hit target if you stayed in it or if you're running it on full automation. That doesn't mean that we're going to drop from here. It means that the limit orders are triggered there. If the limit orders trigger there and there's a load of money going short, but there's more money wants to go long, this will not hold and it will push up to the next level. Then we'll try that level and see if there's more sellers there than buyers. If not, we'll break out the highs. We'll see what happens. But I'll take off the second there. So big drop from there, but obviously, as you can see, the buyers are buying it back up. So we'll see where we go. Got half a chance of going long. It's done it so far this morning, isn't it? So holding everything at the moment. We'll start to unload some of this tomorrow. So if this is looking a very similar picture tomorrow, I've got $600, $600, $500, $300 lying around. I'm going to start piling that back into the P&L tomorrow, just because on Wednesday, if it does all go the wrong way, we're going to lose all of that. But we can put all these positions back on and take them off again. So it's worth banking everything. But I'm going to leave it today. So I might have a flat P&L today, just while I'm waiting to see what the market does today, because it's a big week. We've got two of the biggest currencies in the world releasing their interest rates. So it's going to be a big one. ADRs today is flat. There's no weekly ranges. It's Monday. We've got the monthlies, obviously. A bit late to be playing monthlies. You only got 2 days left this week, this month. But there's nothing on the weeklies. Just broken my dashboard. There's nothing on the weeklies, and there's nothing so far today on ADRs, which you wouldn't expect. It is Monday and generally tends to be a fairly quiet open during Asia, unless there's been anything happening over the weekend, which this weekend there hasn't. So nothing to look at there. RSIs, there's a few to look at. Very much the same as before. So these RSIs that we've got extended here are kind of RSIs that we keep getting. We keep looking at these like week after week because the market's sort of bouncing around and keeps re-hitting RSI levels as things are just sort of grinding away at the moment. But Aussie dollar CAD, that's a hit to the upside. First entry taken on that one on Friday. That was an H1 there. So you saw the H1 RSI extension there straight out 2 days later in there. looking to come out on that propulsion gap down there. So that's an H1 RSI extension. It's also extended on the 4. Target is 50% of that move. This propulsion gap, basically. You could target that one. That one's kind of been filled, really. But if you want to take a quick, fast TP, you could put your target in that one there. Yeah, so Aussie dollar CAD is a short. All these yens, we've got the CAD yen, the Swiss yen. Oh, there's only 2 actually now. So CAD yen and Swiss yen. Not interested in longing these personally. Up to you. Obviously, with what's going on with Japan at the moment and talk of intervention all the time, we're expecting the Japanese to power up and everything to come down against the yen. As we keep getting all these little intervention moves they keep putting in to try and shock the market into doing the right thing, but it's not at the moment. So what it is, it's kind of going the right way, but not quite. If you're going to take longs on these, there's a lovely W pattern reversal forming. There's your upside resistance in that propulsion gap. I would just make sure you're out there. If you want to scalp long, but if you get stuck on an intervention move and this thing comes down 400 to 800% of ADR, which it will do on an intervention, you ain't getting out of that. Okay, so it's a loss. You'd have to take a loss on it. You won't get out of it. So just be careful longing anything against the yen. So Swiss yen and CAD yen are both long opportunities, H1 RSI extensions, but there's every chance it may well do this interim. But if it does do that, it's going to be a big, fast move, which you're just not going to escape. So I've got the EA turned off, which is why I've got no trades on these. I've got the EA turned off on all yen pairs at the moment, not taking any longs. I am short US dollar yen, and that's all. So US dollar Swiss is an H4. This was an H1 RSI extension on Friday. I'm in it. Target is down here, where that accumulation is. The propulsion gap target to the downside there is, as you can see, like 175 ADR away. It's a long, long, long way away. I've put this to break even as well, this Euro Swiss, which I don't normally do. But the reason I'm doing this is with what's going on at the moment with Israel, there's obviously been a lot of safe haven runs going into the Swiss franc. We would expect all of those safe haven runs to come out of the Swiss franc. So when you come out of the Swiss franc, that powers up everything against it. And that's what we started to see happening on Friday. There is a good chance that it could also flip back the other way. So we could well see there be a big, strong push back into the Swiss franc. But if they keep pulling out of it, we're going to see it go that way. So with things escalating, I'm kind of more thinking we might get a bit more power in the Swissy. So I'm just protecting this one because it's in profit and it's equidistant at the moment between where I want it to go and where it obviously could fly back the other way if they all start piling out the Swiss franc and just completely get out of that Swiss franc move. I thought it's better to break even it because if it goes into drawdown, there's a good chance we could just get a continuation rally on this. But as you can see, DAX is just stalled out. Got an inside bar on the DAX. Yeah, so inside bar, wicks. So there's your movement, price movement, indecision, indecision. Or poing, I don't know, one or the other. So yeah, just be careful with the Euro Swiss. This is a 50% retracement we've just put in. So potentially we could be looking at a new down leg, which is absolutely fine, in which case then my target is very conservative. That would be a decent target, that propulsion gap. But if we are going to continue market structure south, you're going to break that low and carry on down to the downside, aren't you? So there's plenty of room to the downside, but I'm just cautious around the Swiss franc at the moment because of what's going on with Israel. At any point, this could either completely power up or completely devalue. Obviously, the way that this is going at the moment, obviously the Swiss franc is powering up again, as you can see, which is good. And that's what I'm kind of thinking might happen. As we escalate in Israel, the ground troops are now gone in, but they're saying this is not the full-scale invasion. This is just we're putting some troops in to get ready for the full-scale invasion. the market is going to go into fear mode and it's going to want to put its money into safe places. Swiss franc is one of the key ones, isn't it? So there's a good chance we might get that power up on the Swissy. If it all de-escalates really quickly, it's going to go that way. So just when you've got volatility, just protect your capital. Yeah. I just had some news from the ECB. We will have to stay at the peak for the next few quarters. Bets on rate cuts happening already in the first half of next year are entirely misplaced. Yeah. I don't know who's betting on the rates coming down first half of next year. I'm not. Not really news. DAX doesn't seem to be reacting to it. The Euro's not really doing a lot, is it? So there's Euro Swiss. US dollar CAD is also extended. So US dollar CAD, I've got a big purple line on my chart, so there must be something of interest there. Yeah. So we've got these two resistances. So this is quite old. Basically, we're going back to February, so beginning of the year. We might find resistance here, but at the moment we're in an uptrend, but we're actually in a massive range, which we've been in now for a year and a half, and we're at the top of that massive range we've been in for a year and a half. So if we're going to continue to be in a massive range, no reason why we shouldn't. It looks like a good short area. So extended on the 4 hour. Good area to get in short. Obviously, if that one doesn't work out, you've got a very nice 175 ADR. You've got a very nice resistance coming up. So you could take a short there, scale in twice, and then take that drop when it comes from that higher resistance. Bear in mind, you've got FOMC this week. Anything you get into today or tomorrow on the US dollar, you are flipping a coin because it could go absolutely anywhere on Wednesday afternoon. So just be aware, obviously, what's coming up on the news. US dollar Swiss also extended on the 4 hour. That's extended up to 75 level. Again, nice looking potential short opportunity. This is a very hard thing to trade when you've got wars starting, because the US dollar is a safe haven as the Swiss is. So if they pile into safe havens, where does this go? Could go anywhere, couldn't it? So it's a difficult one to trade. At the moment, it's looking like a short. It's extended. We should be getting a little bit of a pullback on that move. Yeah. So we'll see, but it's a nice propulsion gap. So yeah, good looking short opportunity there. But again, with anything at the moment, I would stay short term. So where you're looking at moves to the downside, I mean, that's a 200% ADR move. I'd be looking more kind of previous days highs. There's no real good support resistance on that entire move apart from there. And that's not enough to take a trade on. It's just not worth the hassle, that one. It's too tricky. That's it. RSIs. DAX is collapsing. There we go. So there's your rejection. So those limit orders won today. So gap fill. Gap fill short. So I actually took 50% less profit. Well, not actually, about 70% of what I could have got today. A win is a win. So flat on the DAX. Well, I am there. I'm not here because it didn't hit my break even there. Did that one. That one didn't. Same thing. One hits, one doesn't. There we go. It's about to stop out. Break even on that one. Flat. 1.4% banked on. I'm going to bank 1.4% there. And 0.5 there. So I just want to see what the I'll do the maths on that later. Anyway, win's a win, isn't it? End of the day. Still in the DAX on this one. Right. So that's it on RSIs. There's no ADRs. I'm going to whiz through all my positions. We're going to have a look at all the positions I'm in on the H1M5 mean reversion. So far this month, 22.5% banked, which is good month. Got 7% drawdown open, so not not uncomfortable, just total normal drawdown really. So yeah, good month this month. There's a few bits though which are really stuck at the minute and have been for a while. You can see there's a lot of 4s and 5s on the amount of trades in positions on these. So we'll have a look through all of these. If there's anything you want to look at specifically, let me know. Morning Shroud. Not in all German departments, only the Catholic ones. Oh, is that Protestantic holiday is today? Okay. This is to do with the German bank holiday tomorrow. Well, it's German holiday. See, we're not interested in holidays. We're interested in bank holidays. That's what's important. If the banks are open, we're trading. If the banks are shut, we're not. That's the difference. So you can have lots of different holidays, but if they don't affect the banking system, we just carry on as normal. So US dollar yen, we'll look at that one. That's on my list. Out of the longs, good job. Brian has made money. Rocket chart. Traded the Aussie 200 this morning. Short break, 2 RTP. Good one. I don't think I've got that on any platform, actually. Aussie. Oh, it's certainly not on that one. It's not going to be. We've got the Aussie on this. Oh. No. Got the Hong Kong and the Japan and Euro stocks, but I haven't got Aussie. But good job. The stock index hedge EA and strategy and the opening range breakout EA and strategy will work on any stock market. As long as there's an open at a specific time every day, which there is with all stock markets, that strategy works. However, how it works will be dependent on how volatile that index is. So not all indexes are created equal. If you've got indexes which have very little opening range movement, they're not going to work. So you just have to play around. But Aussie, you can trade any stock market that opens. The Hang Seng, there's loads of them out there. It's just the market tends to trade the US, the UK, and Frankfurt because they're the 3 largest. So there's lots of other indexes as well, which move, like the Russell 2000, for example. You can trade the Russell. The Russell opens, but the Russell's very dense. It's got 2,000 stocks in it. So the movement is very thick, slow, but slow and steady. So again, there's enough indexes with the NASDAQ, the Dow, the S&P, the DAX, and the FTSE, really, in the morning, in the afternoon, you don't need any more. But if times don't suit you, obviously there are the Aussie indexes as well. And obviously the Japanese and Hong Kong. Plenty. But back test. Watch it visually. The best thing to do is stick it in the strategy tester and watch it open. Watch the price movement and see how often it goes and how often it doesn't, and just get a feel for whether or not it's going to be one that's going to be worth bothering with. But so there you go. So that's the open done. Right. So my positions. I'm going to start at the bottom. We'll go oil up. So oil at the moment, we've made no progress whatsoever last week. So the move on this that we had, we're looking for a next leg up, basically. So we've got this low, high, higher low. We're looking for the higher high to go in, but what we've actually got is a sort of pause and a push down. We have not put in a new low here, however. So market structure is very much still bullish, and we're waiting for this new up leg. So if you break it down into smaller structure, sort of the interim structure on this, we've got the low, the high, the higher low, the higher high. And this is where it all gets a little bit contracted and complicated. In fact, it's probably better to do that. Yeah, so we've got a higher low. So now we're looking for a higher high to break this level here. So I've got 4 positions on this. One there, one there, one there, one there. So this was a breakout from that gap play, which immediately, that's you couldn't sell it at a worse position, could you? As soon as I sold it, literally, I sold it. The next 5-minute candle went down and it never came back. Literally, that is the worst possible sell order I've ever placed in my life. Buy order, rather. But hey, what the hell? I don't care. I've now moved my buy order all the way down to there, and that's the beauty of position trading, isn't it? Don't like that price? Screw it. I'll have that one, please. But yeah, stuck. 4 days sideways. We haven't gone anywhere. So at the moment, we are still holding this level. I've got a stop loss here, which is placed on this order here. Because if this does break down today, yeah, we got this low here, which is very, very solid. Yeah, we've bounced. Yeah, the market is going, nope, 83.5, 83.3. We don't want any lower than that at the moment. So that's kind of my line in the sand. I don't mind wicking through it. That's fine. But if we are going to wick through it too far, after having hit it so many times, if it keeps cracking at this level, it will break. So I'm going to get out of this one down here and just reduce the drawdown. I can add it back on again here or here, and that's what I will do. So if we get an ADR hit to the downside, I will add again, but I'm going to take this one off, and it's going to take something like 0.25% loss. But we are stuck. So I'm anticipating a new high. What we're waiting for is something to happen that will escalate the conflict, which will drive oil. So if that doesn't escalate, there's a good chance we might drop again. So we'll see what happens, but basically looking for longs on that one. US dollar yen, been in this forever. It's costing me pretty much my mortgage in swaps since I got in on this intervention. So yeah, I'm still in it and I'm still waiting now. This is week 4. We've had a beautiful retest of 150, which has failed dramatically. So in my eyes, the only way is down. FOMC this week is either going to drive the dollar or dump the dollar, or it's going to do nothing to the dollar. So I'm suspecting it's more likely going to do nothing to the dollar, because although we'll get a lot of volatility off of it, the Fed aren't going to come out and say anything apart from we are not changing interest rates until at least the latter half or latter quarter of next year. They're not changing interest rates. Yeah, they've been very clear. They are at terminal rate. Things can change, obviously, and this is why we have to be aware of, obviously, FOMC and what's happening, because they may well come out and say something that is, yeah, actually, we might have to do something with those rates. But at the moment, what we should be getting is forward guidance that we will be pulling the rates down next year, as the ECB have just said this morning. You're not looking at, looking summer next year when we will start to reduce those rates. So I can't see anything massively bullish or massively bearish coming out. If the market decide to rally on whatever is said, the Japanese are going to obviously counter. So I'm still absolutely happy as Larry to be short on this. However, as you can see, we can't make any progress on it in any direction at the moment because the Japanese are just not powering it up properly. We're getting these tiny little interventions. Yeah, they're not big enough. And the market is not paying enough attention to them at the moment. So it'll only go one way, that way. And when it goes too far that way, it will come down at a massive, massive rate. Or we will get exactly the same as we had last time, where the market goes, yep, sorry, we'll buy the yen. And we'll get 2 weeks of drop. Either way, we're coming down, aren't we? And then we're likely going to head into a range on this. Because there's no reason to suddenly stick all your money in the Japanese yen. Unless, of course, tomorrow morning, the Japanese come out and go, that negative 0.1 we've had for 6 years? We're going to give you a positive 0.1 now. The yen is going to go through the roof and everything's going to collapse against it. So there's all sorts of things, but everything I can see is bullish yen moving forward. So at the moment, though, yeah, it needs a reason. So it could do that for another week, literally, and just cost me a fortune in swaps. Just the most horrible thing in the world. Just costs an absolute fortune in swaps. 3, 4, 5, 6, $850 in swaps on those 3 positions alone. It's just a pain in the ass to hold, but once you're in it, you're in it. Not like you can do. So that's US dollar yen. New Zealand dollar, US dollar have on the H1 extension was all the way back here. Sorry, no, it wasn't. It was all the way back. It was much further back than that. Again, all these, I've had these holds for such a long time. Now, this is coming up for a month old. That was the initial H1. Yeah, we were looking for a pullback continuation. What we got was sideways for 3 days, 4 days, a little bit of push, sideways for 5 or 6 days. Price discovery failed back in here for 3 days. It's just, since I got into it, we've literally had 2 moves. You just can't do anything with it. It's not moving. It's now, this trade is completely invalid. There is no RSI extension. RSI is back to the middle. It's been back to the middle for most of the move. There's nothing you can do. You're in it. I'm in long. My position is long. I'm waiting. I'll get out very easily. But all I'm asking for is literally an ADR. One ADR move to the upside on positive New Zealand or Aussie news or negative US news, and I'm out with a very nice profit. But at the moment, all the time this is just sitting here hovering around break even, I'm just going to hold it. And if it continues down, it continues down. There's nothing I can do. Stuck sideways at the minute. New Zealand dollar Swiss. Got out of a large proportion of this one on Friday. Basically, this was, I could have got out the whole thing. What I decided to do was get out of some of it because a lot of this movement was on the Swiss franc intervention. Yeah, so you got the big move there, you got the big move there. These are intervention moves. This is when Israel and Hamas thing kicked off. This was the weekend, and we were like, let's put some more money into it. We've gone nowhere since, but we are starting to weaken, which is the market gradually pulling out of the Swiss franc. So they put it all into the Swiss franc. If everything goes well, they'll pull it all out of the Swiss franc again because there's no reason to hold it there permanently. It's just a holding pattern, the Swiss franc safe haven. So got out of a vast majority of it. This position down here, if it continues down again today, I will add back on again down there. And if we push up again, I will take it off again. If we push up today, I will get out the whole thing. If we can get an ADR hit today, I will exit the rest of that position and just go flat on it, I think. So we'll see what happens with it. There's lots of upside on this, but with what's going on in the world at the moment, there's a good chance we will get more money coming into that Swiss franc, which obviously is going to drive this down. So everything's on a knife edge at the moment. Euro New Zealand got 5 on this. This has been a short for not quite over a month. But that was the initial entry there, beginning of October, 12th of October. So we literally just had a bit of a squeeze and we've sat sideways now for over a week. We're not going anywhere at all. So again, a lot of this stuff is just sitting stagnant. Nothing we can do with it. So it trades invalid, just waiting. But I need literally an ADR, one ADR. Everything pretty much I've got on at the moment, I literally just need an ADR. One ADR, one move, one. Just one day. Just give us 1 day's movement and I'm out. So not going anywhere, sideways. Euro New Zealand. We've got the Euro Swiss, which is in profit. I've already covered this one, so I've got a break even on that one. CAD Swiss, same thing. 1, 2, 3, 4, 5, 6, 7. 7 days, absolutely sideways. Really stuck on this at the minute. This is a pain in the backside. I need to do some drawdown control on this, I think, because the average is so far away. So if I can bank some of this, what I'll do tomorrow when I look at banking some of the profit ahead of FOMC, I will probably put half of that into CAD Swiss and get rid of half of this position, or some of this position anyway, because it's not going anywhere at all at the moment. The CAD is going to go with the with the US dollar. Swiss franc is obviously going to get bought up if everything kicks off over there. And if oil does manage to make that rally, the Canadian dollar is going to power up. So there's arguments for this to go long, and there's arguments for this to go short as well. It's just at the moment again, stagnated. So stuck in that, 5 positions on. Aussie, New Zealand, we've looked at already. So again, very much similar situation on this one, pretty sideways. We are breaking out the highs this morning, so we may well find that we get limit triggers. We've tried this morning to get through. It's having another crack now, so we might get an end pattern reversal off of this and then come back down into these lows. That accumulation basically is where we're bouncing. So we're forming a new range. If it does go to the upside, fine, I can get on it and then get out on a pullback. Oz Swiss stuck. This one basically I've just got a single sell on, but as you can see, very much the same. We got stuck in it for weeks. Got out of the whole thing on Friday, flat, and flipped short. Basically, we're up at the highs, so looking for Swiss franc to power up and come back down again. Looking for that propulsion gap, which is a 50% retracement. If it wants to continue, that's fine. Do the same sort of thing as that. Just normal market structure is what I'm looking for. So pull back long. If it does just do something like that and then break that high, we've got an accumulation or a balance area there where we're going to find sellers start to sell back down. So I'll add up there and get out on the drop. And Aussie dollar CAD. So one on that, short, looking for a nice retracement back down into propulsion, down into there. First entry. So a couple of first entries on. Everything else is just stagnant. Nothing worse than watching your balance get hijacked in a range from swaps. I know. That US dollar yen is just a killer. But here's what it is. Do I ever look at gold? Only when people ask. I don't trade it. So just don't trade it. It's not a position trading instrument. It's too volatile. You can position trade it if you want, but don't come crying to me when you get stuck in a catastrophic move or in this. Yeah. So that was your short entry. Whoops. It's just not a position trading instrument. Commodities are not great for position trading, he says, being in oil. I don't position trade oil normally. I am in it purely for the war. So commodities are great war instruments, because they go up. So gold goes up when we've got conflict. Oil goes up when we've got conflict. And stock markets tend to go down. So, yeah, but gold is one of those instruments. You get these days. This is what kills you. So I identified years ago, this is not good for position trading because, yeah, you got a lovely RSI extension there. But look at that. That was, I think, a 175 ADR day. That's 631 off of a 260. That's 300 ADR, 300% of ADR. And then it still hasn't pulled back on it. Look, safe haven run. It's just trading safe havens is difficult because the market will push and pull. Yeah, and then push and pull. With safe havens, it will push and push and push and push. If you've sold it on an RSI extension expecting a pull because they need to profit take that move, they don't need to profit take that move. That's the difference. The reason position trading works and works so well in FX is because FX is manipulated and speculative desks in banks use it to build profit and take profit, and then build profit and take profit, which is why we get market structure so nicely in FX pairs. In commodities like gold, when there's a war, they will just buy gold. And if that war escalates, they'll buy more of it. And then they will hold it for a long time while they're unsure as to what's going on with that war. And then if it worsens and expands, they'll buy more of it. And it will just keep going like that. And it's not just war. It's any financial problem. If there's a massive earthquake in America, New Zealand, or whatever, there's a tsunami, there's a banking crisis, a mortgage crisis, there's anything goes wrong, you put your money into places which are safe. This metal that we have under the ground in limited supply that everybody wants to get hold of, and there's not much of it around, especially while Russia has got an import-export ban on, where we can't get hold of theirs, and they've got 50% of the stuff. it becomes more and more scarce. Therefore, it becomes more and more valuable. So it doesn't, there's no need to profit take it. Why? Because it's expected to go up. So I'm going to hold the thing. Yeah, so that's why it doesn't work. It works for a period of time and then it doesn't. And when it doesn't, it blows your account. It's just no point. Backtest gold. Backtest gold and backtest oil. Those two instruments you'll find very, very difficult to make money out of. Long-term position trading. DAX has done a 3-bar reversal. We're miles away from that gap fill. We haven't even got to the low trigger today. Shorts, but looks like it wants to rally again. FTSE's doing something similar as well, so might go long again. But I'm done for the day on it anyway. But if you do want to take another one, but just watch that gap fill. Okay. I'm not convinced that they are not going to run for that gap. It's too big. It's just too big. It's too much of a target. There's too many banks and institutions offside on this short. Look at what they did on Friday. Yeah. From the New York Open, which is there. Yeah. As soon as New York opened, they sold and didn't stop selling. Yeah. There's a lot of market participants during that sell that are still short. And what are they now? Deep in the hole. Where are they going to want it to go? Down there. This is why gaps get filled. Yeah, market participants caught offside, they have the power to drive it back to where they need it to get out of and break even on that position they're underwater on. Yeah, there's a lot underwater there. So I would say that's New York Open. That's where they started selling. What's happened today? We got back to the New York Open where they started selling, and what have they done? Added more sells. Where do you think this is potentially going? Probably more likely a short today, isn't it? But we'll see. All down to the market participants today. Yesterday was yesterday. Friday was Friday. Today's a new day. If they need to write it off, they'll write it off. Not they do often, though, do they? Gaps get filled. Every single day. They're just not normally that big. Right, that's all I've got for you this morning. All done. I'll be back this afternoon at 1:20. God, I hate it when the clocks change. It's so annoying. Okay, so it is now 4:59 a.m. Right? So 9:30 a.m. New York time in the UK is 1:30 this afternoon. So the market opens at 9:30. Yeah, that is 1:30 in the UK. I will be on at 1:20 p.m. UK time. The only reason I'm saying it all like this is because it's the most confusing day of the trading year if you live in the UK or Europe, because it all goes wrong. You have to change all your EAs. Your broker may or may not change chart time, because some of them don't. Mine does, so I have to change everything. Some don't. So I can't help you. I've had so many Telegram messages over the weekend. What do we do on Monday? I don't know. Go back to square one. Imagine you've never traded with any of the EAs before and look at the broker time on Monday and figure it out, because I can't help you. Everybody does it different. It's a pain in the arse, and I wish we'd just drop this whole changing clocks thing. We just don't need it anymore. We just had the German GDP come through at a negative 0.1. Forecast was a negative 0.2, so that's ever so slightly better than forecast. Unlikely we'll get a lot of movement off of that on the euros, but we'll have a look. Oh, excuse me. Oops, that's pound. Market's rallying a bit on that, look. So that's, yeah. That is slightly bullish for the euro. See if it helps. It's not against the pound, but not a massive move, is it? But little bit of bullishness coming through. You've done some testing on new strategy. No, haven't done anything more on it yet. The hedging for FX, no. Haven't done anything further than where I got to. I've just been busy with other stuff. So had half term and other things, and stuff just got in the way. Brian, 2,614% 1 week, one ticker, one trade, according to Nate Bear. Who's Nate Bear? Is he a YouTuber? Bear? How do you spell his name? B-A-E-R? No, that's spelt wrong, obviously. Manifold Markets. Is it this guy? That's not the healthiest P&L in the world, is it? So this is October. That doesn't look like 2,614% profit to me, does it? Oh, I can't type this morning. Am I searching for YouTube that doesn't exist? Nate Bear's profit stream. One ticker payouts strategy. Why is Bill Tucker there? Don't know. Don't believe it. If somebody's made 2,600% in 1 week, they've given up. New advert just hit your screen. Yeah, I have to turn off I've turned off my ad blocker on YouTube, and I've also turned off my ad blocker on Facebook because I'm missing out on all these ads now. I love looking at them just for comedy value. It also gives me ideas for videos, like the one I released this weekend. I'm on the cusp of putting like a couple of grand just for fun into YouTube advertising, just to get that video promoted, just to piss off all these people that do these adverts for these videos where they've got these strategies which will make you a millionaire. That was him, was it? Never trust a man with a beard. I know lots of people with beards. If you've got a beard, I'm joking. There's lots of people with beards. The only thing I can think of, because he does look normal, doesn't he, that bloke? So I'm just trying to think of something I can say never trust and he's just got a beard. Anyway. I'll stop there before I get done for slander. We are moving off the DAX, look. That 3-bar reversal is working like a dream. So watch this for a double top. M pattern bounce. I can't believe they're not going to do this today. They may do it in New York. We might have to wait until 1:20 this afternoon, not 2:20 this afternoon, for that to happen. So I will be back then. We will see. So have a good morning. I'll be back at 1:20. I've got to remember myself to come back on early as well. So if you need anything, I'll be in Telegram. Other than that, oh, by the way, we've also got gaps up on the US indices as well today. So watch this. There's so many reasons to go short on everything today. All the US indices have also got massive gaps. Look, so just if you're going to go long today, keep it tight if you're going to trade. So yeah, back 1:20 this afternoon. Back 7:50 tomorrow morning, usual time for Frankfurt. If you need anything, I'll be in Telegram. Other than that, I'll see you guys later this afternoon or tomorrow morning. Have a good day.